9/2/2013. Tomorrow will be the first trading day of September, and we're looking at Tesla. Big Tesla Motors. This thing has been on fire. The bull run has been on fire, and it's ready to pull back. The volatility in the lower August volume pushed us to 52-week highs. Here on the daily, we're going to be monitoring this half bar reversal, and that we would start a 60-minute chart that I'm going to show on Tesla. The 60-minute chart, we're going to be looking for a 60-minute reversal on how September starts out tomorrow on September 3rd, that on a 60-minute level that we have these reversals, and we're going to continue to sell short up at the highs for the intraday reversal on Tesla. That is a 60-minute update. This is the daily MMT update, and we're right up here at multi-year highs in the calendar month of August, and September 3rd starts tomorrow. Every gap open up, we look to sell short, then we have to confirm it with the actual reversal bar. Here on a public chart, on a weekly public chart, we can clearly see what the public will look at. It's totally overextended in value. It's going to have price volatility. However, it will catch up to the broader part of the NASDAQ 100. It'll catch up with the Googles that have reversed and other stocks. Netflix is another one that's got a great. So you got LinkedIn, Netflix, and Tesla, all three on our radar. So here is the Tesla weekly. We're overbought on this thing. We're going to be coming down fairly decent. We're clearly going to say that the October regular strike price right here, monthly, not a weekly one. We'll trade weeklies as well, but we're just going to cover right now the monthly that we would lock in up here, and that's the 175 put that I'm going to show everybody here. Now, let me just show you something on a daily. These puts were $28 a contract. It's a regular expiration, monthly, October regular, third calendar week of the month. Now, because of our abilities to be wholesale in our option pit, our market maker division, is that you can clearly get with that right away by buying wholesale with us and getting involved in our program. How do you do that? You go here to stockmarketfunding.com, you go down here to the SMF options exchange, and you click on it. One of the things that I am going to say, that the contract hit a low of the 175 put in the money, the low 1785. What day was that? That was on 8/26 when we hit that low on that contract. Then we traded all the way up here. So when Tesla sold off from those highs of the 175, that's on this chart right here. When Tesla made the highs here of 175, that put option made the low here. When we had that reversal from the high to that low, this particular daily contract, which is the October one, this went from 1785, and one day it went right shooting to 2390. So there was that intraday trade based on the stock reversing off of that original high. Bam! It went straight right back down. Look at that thing. So here are the values right here, MMTs. The high of that day, as we know, registered and clocked in, and this is a daily chart. So basically what we're looking for right now is where the highs are going to get lower, and this particular one right here is 169. Okay? This one here is 173, and it sold back down to the low of 160.95. That was a $13 reversal. And the high got so overbought and exhausted, that's what made this 175 regular put. Now remember, it's a monthly. They trade totally different. You'll have to come to Stock Market Funding and learn about different premiums, weeklies versus monthlies. Okay, so basically we're going to be looking at where we would buy that 175 put, which is now in the money. Okay, and we're buying wholesale. We're not, so the low here, it closes at $19.10 and the low is $17.85. These particular kinds of put options move totally different in the exchange pit. And so if you're the public and you're viewing this, hey, Whatever you're thinking and what we know that happens is quite different. So you need to get with us and call us today. That way we can help you understand it in the directional price movement. I have featured the 175 put within the volatility ranges for the put side that is totally deflated, and that Tesla Motors is at a 52-week high, had a big reversal here, had another distribution, and then we bounce right back up. And just remember that these daily bars, that all of this is the dog days of August. But now September 3rd is going to be different. What we are going to say is that people will sell out of Tesla to raise cash in the bigger, broader part of the tape. There are a lot of things that can happen. A lot of people can get caught in these highs. There are other times that Tesla loves to make highs. Here, let's just show you the last couple of them. They love to make highs and reverse. That's a good trade. Then you have to go long. But then they shake people out of the trade, it reverses, and then you have to go long. Well, the same thing that happens here and these other reversals is that now we're at the major high in September. We're going to see the same kind of outcome. We will be selling short on any open up, gap open up. And we can clearly see from a 60-minute level where we had that reversal up here, and at the 171 level, we traded from this high on a 60. The high was 171. This high was 171.5. And this low over here on a 60-minute level hit 162. So you can see that there are reversals from these gaps and these highs. So intraday, selling short the equity at resistance, and it falls in price, we make money. So there's a long ways for Tesla to sell back down to in a broader market sell-off. And if the bigger money people, we're going to be watching where we get another daily distribution bar to confirm it. And that we would have to break this whole area to confirm it. As we make the transactions to confirm it, has to have a red bar. But we're going to look and see if it'll trade down to these support levels. Remember, this is 157.48. This particular half bar here we're going to be watching. It's going to be 158.65. This is where that next sell down will be. And remember, it's 9/2/2013. Okay, MMT, I've concluded what Tesla likes to do. Here's a 3-minute. It trades up. That's all just short-term volatility that algorithms are deployed to create the upside and the downside. Nonetheless, the lesson to learn is how do I remove my dollar capital risk and buy the lows over here. Happy Labor Day to everybody. It's 9:11 a.m., 9/2/2013. Let us know one thing, though, that we are market makers in that option pit. And I just want to tell you that you've got to be a wholesale buyer. Look at the people who went from $28 all the way down here to 17, the low here, 17.85, the last high, and they brought them all the way back down here in the wholesale range. So any move up, they steal the premium. Lower, we're going to make our entry accordingly, that the daily resistance and that a lower high would come into play to support to purchase at another. So if they drop the bids down and we get hit, then the verifier has to come in MMT that they have to do that, so that the stock continues to sell from its intraday highs. Intraday highs, 60-minute level down, 60-minute level reversals. Up here, another 60-minute reversal would bring to lower lows. Just remember, it had its original reversal here. Its second reversal, now we're going to be looking at the third reversal, that it would trade down here right around, let's say, the 155.5 area from the current levels up here, going through the month of September and October. Once again, if I want to be a market maker in the option pit, it's only who of me to learn what your public model is different than our model, the market maker model. And the pricing and how they steal premium from the public, they do lots of things to you. There's lots of example on this page. Click for that free day trial and you're ready to go. You can spend one day with this.